Predict stock crashes 72 hours early with AI, Vol.st tested. For years, my approach to the stock market resembled a weather vane in a hurricane, spinning wildly, reacting to every gust of news, analyst gossip, and my own sheer panic. My portfolio was less a carefully tended garden and more a chaotic compost heap of sure things and can't-miss opportunities that invariably missed. I'd buy high on euphoria, sell low on a whim disguised as a gut feeling, and my most consistent return was the tax loss I could claim each year. My broker's personal jet, I was convinced, had a wing polished exclusively with the gloss of my commissions. The problem with the market is that it's not a machine. It's a psychopath. It's a living, breathing entity fueled by greed, fear, caffeine, and the collective PTSD of every investor who lived through a crash. Trying to predict its tantrums by reading news headlines is like trying to predict a toddler's next meltdown by studying the nutritional content of their apple juice. You're missing the signals for the noise. Then, I stopped trying to read the mind of the psychopath and started feeding its digital shadow to a different kind of psychopath, a cold, unblinking, artificially intelligent one. This wasn't about finding a 10x stock pick, YouTube guru. This was about something far more powerful and, frankly, more cynical: catastrophe insurance. I didn't need an AI to tell me what to buy. I needed an AI to scream at me when to run. I gained access to a system, one reportedly back-tested by a hedge fund, so secretive its name is probably just a 3-digit number, that promised to do just that: predict a major market correction, not with a vague horoscope, but with a precise 72-hour early warning. The theory was breathtakingly simple. This AI wasn't just scanning headlines for the words inflation or recession. That's what humans do. This thing was a digital bloodhound sniffing for the faintest scent of collective panic in the digital exhaust of the entire financial world. It was analyzing a stupefying array of data points in real time. The millisecond speed order flows of dark pools, where institutional money moves in secret, the sentiment, sarcasm, and sheer stupidity of millions of financial social media posts, deciphering the difference between a genuine warning and a meme about stonks, satellite imagery of shipping container traffic in major ports, even slight changes in the linguistic complexity of Federal Reserve communications, searching for the subtle tells of uncertainty. It was cross-referencing the volatility of bond yields with the online chatter in crypto forums. It was, for all intents and purposes, giving the entire global financial system a continuous fMRI scan, looking for the tiny pre-seizure flickers of neurological misfires that precede a grand mal crash. The first time it flashed a red alert to me, I laughed. The sun was shining. The indexes were near all-time highs. CNBC was talking about a new paradigm. My portfolio was gloriously, brilliantly green. The AI's report was a cascade of probabilities and correlations that sounded like technobabble: liquidity fragmentation in ETF order books, divergence in VIX futures term structure, anomalous sentiment decay in retail investor forums. It concluded with a stark, unemotional recommendation: initiate downside protection. High probability of significant volatility event within 72 hours. It felt insane. It was like a weather app predicting a blizzard on a cloudless, 80-degree day. My gut, that infamous liar, told me to ignore it. But then I remember the tax loss years. With the sigh of a man betting against himself, I bought a handful of cheap, out-of-the-money put options, essentially an insurance policy that would pay out if the market tanked. For about 68 hours, I felt like a complete fool. The market churned sideways. My insurance policy was bleeding value. I was paying for a paranoid robot's bad dream. Then, on the morning of the third day, a major European bank unexpectedly reported a massive, previously hidden loss on a derivative trade. It was a pebble. Then, rumors swirled about its exposure to other firms. A few more pebbles. By midday, the avalanche had begun. Fear, the only real contagion on Wall Street, spread. The market didn't just dip, it plunged. My insurance policy? It paid out over 400%. I was no longer a weather vane. I was in the eye of the hurricane, watching the chaos unfold with a bizarre, calm detachment. The AI hadn't predicted the specific news event. That was unknowable. It had predicted the market's allergic reaction to a negative shock it knew was statistically overdue. It had detected the system-wide vulnerability, the financial histamine that was primed and ready to unleash chaos at the slightest provocation. Of course, with great power comes great absurdity. The system isn't perfect. It once issued a false positive warning triggered by what I can only assume was a perfect storm of weird data. A viral meme about the end of fiat currency coinciding with a technical glitch in the trading of a single, obscure ETF. I sold everything, braced for the apocalypse, and nothing happened. The market yawned. I felt like, coyote after running off a cliff, looking down, and only then realizing the ground was gone. The real revolution here isn't about getting rich quick. It's about a fundamental shift in market power. For decades, the big players have had the advantage of speed, information, and sophisticated risk models. Now, that algorithmic firepower is becoming accessible. This AI is a democratizer of paranoia, a canary in the coal mine for the retail investor. It doesn't give you a winning lottery ticket. It gives you a helmet and a warning siren before the roof caves in. It turns investing from a game of blind hope into one of calculated strategy. You still need to pick companies you believe in for the long term. But now, you can build the bunker before the bombs fall, protecting those long-term investments for short-term hysterics. The system is still being refined, tested in the brutal coliseum of the real world. But its existence proves a powerful, slightly terrifying point. The market may be a psychopath, but we are no longer trying to be its therapist. We've built a machine that can mirror its insanity, anticipate its mood swings, and whisper its secrets to us 72 hours early. And on Wall Street, a 3-day head start isn't just an advantage, it's a lifetime. If you found this video informative, please like and subscribe. It will really help this channel out. Thank you for watching. Stay tuned for more informative videos coming.